I looked through hundreds of YouTube videos, trading blogs, and even some trading books to see if I could find the best indicator out there. The most efficient, effective, and highest win rate indicator in the trading world. And to be honest, it wasn't easy. Turns out, a lot of traders have different opinions on what the best indicator is, not surprising. And there's not really a direct answer. All indicators have their ups and downs. On top of that, you should never really rely on just one indicator. So it's really tough saying one's better than another. But with that said, I think I found one. Now, I'm almost certain, if you've been in the trading game for a while, you have definitely heard of this indicator. But if you're like me, you might have overlooked it and never really took a deep dive into understanding it better. What's the indicator? The VWAP. VWAP? No. VWAP. If you say VWAP, I'm sorry, we can't be friends. If you haven't heard of it, well, you're in for a treat. If you have heard of it before, you're still gonna wanna watch this. If you're like me, you might have a slight ego and say, oh, that's preposterous, I know that indicator well enough already. I don't need to learn more about it. Well, fancy guy with a monocle, that's where you're wrong. That's actually where a lot of traders start to fail. They get comfortable with where they're at and stop trying to improve. So I deeply suggest watching this video because you'll probably learn something you didn't know before. Also, at the end of the video, I'll tell you a strategy to make the VWAP even more effective than it already is. So the VWAP, the volume weighted average price. Think of it as almost just a regular old moving average, but upgraded. The reason being it takes volume into consideration rather than just previous price. And if you've watched my videos before, you all know why we like volume so much.
Yes, the volume.
Volume is king. Now, I want you guys to think of it like this. Say if we have a chart, price A at $20 and price B is at $40. So just a normal uptrend. Let me ask you something. What's the average price between the 2 points? It's $30. $30 is right in the middle of the 2 points and is the average price on the chart. What I just described is a moving average. A moving average just finds a certain amount of past candlesticks, looks at the prices of them, determines the average price, and draws a line there. Now, let's go back to the chart and we're gonna keep the same exact price points, except this time we're gonna add a little more information. Let's say at point A there was 100 shares of volume, but at point B there was 10,000 shares of volume. Now, let me ask you the same question again. Is the average price really $30? Well, sure, on the surface, yeah, $30 is the average. But this volume metric can tell so much more of a story than an average price ever could. And if you're asking me, the impact on point B was so much more than point A, so in my mind, the average price is actually up here closer to point B. So in other words, the VWAP is saying, hey, I don't really care about this $30 number. I care where more people are entering and exiting. That's really the beauty of the VWAP. But those are just the basics. Let's take a deeper dive and get a little bit more advanced on why the VWAP is one of the best indicators out there. For starters, the VWAP is one of the most installed indicators in the trading world. So millions of traders have the same exact line on their chart as you do. So whenever trading, there's going to be a lot of eyes when that price hits the VWAP level. Hopefully you guys understand on why that's so important. Also, one very important thing you must know about the VWAP is that a lot of institutional banks and mutual funds like to place their orders around the VWAP because typically the VWAP expresses the most amount of liquidity because there's more people willing to trade at that price. So the institutional banks and mutual funds can get in and out of their trades with the least amount of market impact as possible, which is pretty important for entities like this. So yeah, the big boys like the VWAP price. Which brings me to my next point, the confirmation of the VWAP. Now the only reason technical analysis works is because people believe it works. If people didn't believe it worked, it would just be a bunch of random lines on a chart. Now, don't get me wrong. I already know there's a lot of people out there that believe technical analysis is just a bunch of bullshit and basically just a bunch of random lines anyways. But you can't deny the fact, if enough people believe in those certain lines, the price will react to them. For instance, the dollar bill, it's worth nothing. It's just a piece of paper. The only reason it's worth something is because we all believe it's worth something. Same goes with trading. Take support and resistance for example. The only reason a support works is because lots of people see past chart history and can pinpoint where those specific areas are. That's why I always say when drawing support and resistance lines to pick the spots that come out to you first. The most most obvious spots, because the more obvious they are, the more people drawing those same exact lines, giving those areas more power. But that is one of the drawbacks of support and resistances. Not everyone is drawing the same exact lines. Now, I want you to think of it like this. If the VWAP is one of the most installed indicators in the world, and it's on the same exact level on everyone's screen, so there's absolutely no confusion on where it is, don't you think that gives it a higher chance of price respecting it? To figure this out, I did some testing. VWAP is dead simple. The price is either above it or below it. When it comes to day trading, simplicity often rules. Now, as a type of backstory on trading with the VWAP, usually it determines if the market is considered in an uptrend or a downtrend. If the price is above the VWAP, it's considered an uptrend. If the price is below the VWAP, it's considered a downtrend. So the VWAP can act as both a support and resistance. When the price is above, it'll act as a support. If the price is below, it'll act as a resistance. Now, I did some digging, and I checked so many charts just to see how powerful the VWAP actually was, and if price actually respected it. And to be honest, it's actually pretty scary on how much the price respects the VWAP. Like in this example, I was day trading, the market opened, and price did a huge spike, making it way above the VWAP, the purple line. It started heading back down, correcting itself, and guess where it bounces? The VWAP. Same thing here. You can see the price fell below the VWAP, and when it started making its reversal, it headed all the way back up until it hit the VWAP as a resistance, and then it headed back down. And these types of plays happened a lot. Now, it's also important to note that VWAP is an intraday indicator. You can't really use it on daily charts because it uses intraday candles and intraday volume to calculate the line. So it's not really meant for long-term investing, but more so for day trading and scalping. For day trading, it'll typically look like this, where the VWAP will have a huge exponential spike right when the market opens, then over the next couple of hours, it'll slowly start to level out. You can almost think of the VWAP as a magnet. The price always wants to go towards it, so if the price has a big huge spike and goes way above the VWAP, it'll naturally want to go back towards it. Same thing if it falls down too fast. It'll naturally want to go back up towards it. It's also important to note that the first time price touches the VWAP is the time you can have the most confidence. Whenever the price first comes near the VWAP, it'll more likely than not respect it. It'll rarely just break through the first time. As time goes on and price hits the VWAP more and more, it will become less and less likely to hold. So when day trading, it can be a great support for the first bounce. Same thing goes for when price is below. The first time price comes up to it, the stronger the resistance will be. As time goes on, the weaker it'll be. Now, of course, price isn't always going to respect the VWAP exactly every single time. There are going to be times when it does these little false breakouts where price breaks through, making you think it's in an uptrend, but then slowly starts fading back down, creating a bull trap. So I think it is important to understand to not treat the VWAP, or any indicator for that matter, as an exact science. You should be treating it as a guide. So this whole false breakout thing is definitely one of the major problems with the VWAP. But luckily for you, there is a way to make the VWAP even more reliable and raise your win percentage using it. It's pretty simple actually. So usually when these false breakouts happen, it's because the overall stock is actually in a downtrend. So this is it trying to reverse, but the downwards momentum is just way too heavy. To fix this, all you're gonna have to do is have your VWAP line, then you're also gonna add a 200 exponential moving average. Now the only rule for this strategy is you will only trade if the price is above the 200 exponential moving average. So if you want to do, say, I don't know, a bounce trade, where you buy when the price dips and hits the VWAP for the first time as you're expecting it to head back up, you can only do that trade if the price is also above the 200 moving average. If it's below, you can't take that trade. This will greatly improve your chances of entering in a winning trade, as you're only trading in a true uptrend and you won't get as many false breakouts. So I told you a little bit on how to trade certain stocks with a VWAP, but how do you find good stocks in the first place? Well, in this video, I tell you the exact characteristics of good stocks and how to find stocks to day trade every single morning, so you can start with one foot in the right direction. Go check that out. Thanks for watching, and I'll see you guys next time.